This conference will now be recorded.
Good morning. It's 9:28. We're going to keep it real quick because I'm running late. But the whole purpose is to be able to start doing these from here. Okay, as always, we go through, we had an unusual day yesterday. You saw what's going on with both the market and the bounce back and then the shorts, and now the shorts are getting fried and now the longs are getting fried. Post expiration. So, wild day also on Monday. Okay, econ calendar. Let's see, we had FOMC, which was done yesterday. Yeah, I was very, very disappointed in Jay Powell, mainly because he got into areas he should have just bounced stuff and said, it's not my area, like CDC and GameStop and that crap, which probably elongated the problem. Of course, we know, I forgot the name, Melvin Capital got into trouble, Plotkin and those guys. So, which I understand now they're part invested by Stevie Cohen, if my information is right. But that was 127 on the FOMC. Now I have a short now that comes up, key numbers I'm looking for. GDP was yesterday. Today is I'm sorry, durable goods was yesterday. Today is GDP. No, this is 28. Oh, I'm sorry. Today is 28, isn't it? Murray, yeah, that was yesterday, correct. GDP was today. It came in. Let's see what it was. We also want to see what jobless claims were. Okay. Hold on. Quickly. Again, we're running a little bit late, but that package is open. The Skype, so you can take a look at it. Look at 4.1 consensus. We're coming at 4. Yeah, well, because there was a big bounce there. Keep that in mind. Yeah, from a very big drop, so that was kind of neutralized. So we're slowing it. I guess we're growing it slightly at the edge, not just a tad after getting dumped so heavy, but that's all good news. Let's move forward. We're gonna get this economy back on track, especially for the housing. 3% on the personal PCEs, but I haven't looked at it in a long time. Up from you, but let's go to jobless claims. That's what I want to look at. New home sales coming up at 10. New home sales coming up at 10. So let me add these. The ones that are crucial, I'm trying to build a list of. And the other report I showed you from MarketWatch, it has a 2 weeks in advance. You get a week X-ray ahead of you. So anyway, jobless claims, let's see what that is. It came in 847 again. Yeah, not good. Yeah, there was a rise report last time, so this is not good at all. We're running at 4 million, like 3 million a month. It's just really, really dangerous. Right. But then we didn't get here overnight, and we're not gonna get out of it overnight. LEI at 10 also. LEI. Okay. And so let's see what new home sales expectation is, and then we move on. Okay. They're expecting 871 as consensus, and the range is reasonably tight, not bad. It looks like what happened. It's like maybe a 4 or 5% play on each side. Yeah, 30. Yeah, maybe a little bit more, but maybe 5% on each side. So it doesn't matter. What matters is that where do we come in with that versus 874? Slightly higher from last. Somebody's texting me. One second. No, that's good. All good. All right. Sorry. Okay. What else do we have on the calendar we got to watch for? ADP is on the 3rd of February, and NFP is on the 5th. Keep that in mind. And then trade deficit is on the 7th. These dates could change slightly. Sometimes they do. We're going to keep that up there. Okay. But the whole issue is that we want to have a little bit of another week forward view on the econ calendar. All right, that done. Now, let me put this back quickly. We will need it, this one. Yeah. Now, the couple of charts I want to show you that are crucial. One, diamond. Obviously, now we see it come back there. Look where we were at. Near the close, we hit the -1 sigma. We almost touched the 50-day bar. Okay, now I'm going to show you why that was supposed to turn. We talked about the word McKenna last night I was reading. That was not necessarily a launch pad mode, but very strong bounce in the work should be expected. And we're up 30 handles here. Yeah. I'm going to put a trade in on the PMT. Remember, because it's a long and a short, one offsets the other slightly. So there's no rush to get in there right now, but I will. I just want to see the first 15 minutes or so, go through, see what we have. DT was a picture to look at. Obviously, it's going to be inside date, no question about it. But we have a slowed down in terms of our rate of growth that we have in the prices. And you can see by the trender. The trender is showing that. So we probably, if we have a chance, just stabilize. If not, we have a bigger problem down the road. So be on the alert on that. So always keep an eye on the trends and Russell. I would always look at their volatility. I would always look at their detrender. Detrender is simply the difference between the price and the moving average. We look at both of them, both 50 and 200. All right, SP1 Momo. We came down fairly harsh yesterday, -7. Not a bounce area, but close to. Okay, we also went down to -2 sigma on SP1. Interesting enough, we didn't see any of that. Why? We're too high up. We're way too high up, so that's why. So yeah, don't get fooled there. The move was strong, very strong. Here's another story: 4 sigma on VIX. Again, value is important, but sigma level is even far more. As work that was done by Bill, I don't know, the guy who invented VXO. All right, so and VXN, yeah, actually he and I exchanged some notes here. Very smart guy, but look at what 4 sigma. What he proved and showed was that what mattered was not what level we're in, is the intensity. What kind of change we're in? And yesterday was massive. I think we moved up 64%. Now we're down 20%. Okay. It's wall of the wall. That's all it is. SQ has air. Okay. I written to him last night. I copied a couple of people. Here's why. If you go here, it shows a 79 reading. High and low with a close of 137. Doesn't work like that. No. There's only one data on that. Comes up once a day after the close. Now, here's the issue. Most likely this is because it was late at night when I discovered it. I mean, it comes out an hour after the close. I was sitting in the veranda having a cigar, thinking about what a day I had, and looked at my trade station on my phone. I have a no trade, just view login there. It doesn't mess up anything else, doesn't interrupt. And I was looking at that and I said, what? No, it doesn't make sense. So I wrote to them. So we got to give them today until they catch it. They have to verify with the exchange. But this is, I do believe this number. I do not believe 79. Yeah, this is design area, design limit. Well, I know we went over the design limit a little bit above a high design limit, but I'm sorry, the design limit is 100. I'm sorry, so 100 to 150. We've gone over that a little bit on the upside, but you can't drop 20% below design limit all of a sudden in one day from 137. Something wrong in calculations. Also, there's some funds in trouble. There's no question. You know, the down drop yesterday was not just limited to a few people. It is widespread. Get notes from some of the Trumpkins saying, "Oh, the small guy is going to be in control, done with his street." Well, hold on, Mr. Trumpkin. That didn't work with Mr. Trump either. And it has never worked in Wall Street, because at least there's more analog for that. These sort of things are short-term stuff. It happens and then walks away. We will not going to be able to function without the street. Please. The system is the solution. Remember that. So you have to gradually change the system, not dramatically like they did with the GameStop and Reddit and all that. And of course, there are going to be some. I mean, you're going to see Yellen coming in hard, and what's his name? Powell, because they have a control over the exchanges and they have control over margin requirements and so forth. So they're going to dampen them. All right, here is early look about here. I started talking about that we're nearing a low area about here. Obviously, I was wrong. It went even further. It went to +4. This is a big spread. The big spread is created by long the front month, short 3 months forward. So long G21 minus K21. That's what the spread is. And then I overlay the sigma challenge to see what the intensity of the move is. Measuring it against itself. And we're at +1. So if we're positive, it says most likely we've seen the low. Obviously, it became very dramatic there, and there was a retest failure, and we came back up. We did drop after the open. I believe this is, yes, 4 in the morning. 0.7. Yeah. Okay, so we closed here. Okay, there we go. We dropped even a little bit further. Rallied, retest this morning at 4 a.m. Now it's rallying up. The classical W. You want to buy the second leg. Okay. A couple of guys wrote to me from PFT, we're getting jumped back in ourselves. I said, fine, it's not optimized. I need to see it open to give you a better pair of the strikes, but they didn't care. That's not we're going to get. But we'll recalibrate that optimize it for you in a few minutes. Hello there. Look at what happened with 10x. This is TNX, the 10-year. We're in the close 1% again. Magic number 1%. Okay. A lot of hedges, a lot of big money, debt instrument funds, bond funds and so forth. All right. Rate, the shape of the curve is normal. It does not say we have a recession coming, and it's slightly rising. That's what you want. Positive slope from the 91-day to 30-year. Okay, and if you want to see what happened here, this is what happened here on the SPY. Just got killed. We got stopped out early. I could have opened that margin a little bit more, but then would have been stopped out later. So I thought this was wide enough. And of course we wide because we had bottom February 19th strikes way out there. So we'll have a little more play. Okay, that's that. Now let's take a look at quickly on there we go. Let me go here. And this probably was not going to give us any signal other than yeah, we pulled back. We pulled back a little bit further. Remember, these divergences continue, and then all of a sudden happens. Are we going to go down? I don't think so. I think we're done. I think we're going to come push, not because I'm long time digest, no, but just analytically, plus end of a month is coming. This is still good earnings season. Apple hit out of the ballpark. These are some reactions because of they priced it too perfectly and didn't get it. So there's a little sell-off there, but hey, some of the bigger names are still out there. Google is there. Not bigger, but big enough or competitive in terms of size. Amazon is out there and so forth. So watch out. I think Amazon's going to hit all the ballpark big time. And you should see the deliveries. It's just been amazing how fast they're delivering. And just because demand is so high, they have to get rid of it. You can't sit in the pipeline. It's not just ordering. They got to clear the pipeline. There's another orders coming in. And as COVID continues, we're going to rely more on Amazon and the likes. So just a little adjustment. We'll take a look at where it ends tomorrow. Okay, we'll do this every day. We're going to go back on this trend every day. Now, overnight, we bring overnight here so you get a little perspective there. I'm sure you know where we are, but look at the movement up. We're almost 1%. That's 8% there. Half as much for the techs. But techs have really kept up their value. What got killed got the Dow futures and S&P futures. Okay, so some volume is coming in. Obviously, overnight was quiet, except until about 4 o'clock when this W was starting completing itself. Okay, these are 15 minutes. If you want to look at it more professionally, I suggest you got 30 and you see all the noise is gone and you can see the W performance, especially on it. Yes, this lower one was like 430, which is London Opens. London Opens, they sold it, and then a little bit after that, after the flush, they get 2 sigma, they bought it, and their value fell. Okay, with that said, let's get to trading. I'm going to post the recording once it's available. All right, closing it off. Okay, thanks. We'll try to do this every day.